On today's Hashi, I'm discussing the end of last week's inflation news, housing inventory update for the last 7, and pending home sales data just released. Today is Monday, March 31st, 2025. I am Byron Lazine, and the Hashi starts now. All right, live from Naples. Welcome into the Hot Sheet. Let me know in the live chat which market you are tuning in from today, wherever you may be. Let's connect together in the live chat. We've got a huge week here as we kick off the Hot Sheet week. We do the show every Monday through Thursday when markets are open, 9:30 on the East, 6:30 on the West. The free and simple way to support the channel is just to subscribe down below. If you're on YouTube, go ahead, hit subscribe and the notification bell. There's a lot going on this week. There's some jobs data coming out the end of this week that's going to be really important on what the Fed's next move is, and certainly what the 10-year is doing. 10-year today, waking up today, is in a pretty good place. Could be a good week for 30-year fixed mortgages this week. This week being Liberation Week. Liberation Day is April 2nd, so that's Wednesday. Peak uncertainty, peak fear, peak, I don't know what's going to happen with tariffs. It's all happening this week. We know for housing, for the spring market, for home buyers, this could lead to more opportunities in the market. Why? It's going to bring that 30-year fix, those long-term rates down. We're already seeing signs of that this morning. So we'll dive into some of that. And before we dive into everything, I have a huge announcement for you. Let me know in the live. Are you ready for the announcement? Do you want something that hasn't been released on any of the BAM social channels yet? I said I'm going to share it with the Hot Sheet audience first because the Hot Sheet audience is the most deserving. We are announcing our next virtual event, BAM Fest 2, coming April 23rd. BAM Fest 2 is going to be April the 23rd. This is Wednesday, noon Eastern, 9 a.m. Pacific time. All right, here are some of the speakers. Myself and Eric, the broke agent, of course, are going to be hosting the event. Veronica Figueroa from EXP. She's one of the most brilliant team leaders across the country. She's going to be speaking. We have Jimmy Burgess from Real. If you've been following Jimmy, he's formerly Berkshire Hathaway Home Services, long time there. Now, obviously, at Real, one of the guys that can break down agent tactics and some of the social stuff like no other. Sharon's going to be joining us again on this virtual event. And this one right here, okay, this keynote is a mystery guest, okay? The mystery guest, and Haley, make sure she dropped it in nowbamfest.com. Make sure you sign up. This is a free event. This mystery guest has been asked multiple times to get on a real estate stage, an event that is open to all agents. And this mystery guest has never done it before. This is a mega name. This is somebody who I can't say too much, but this is a mega name, somebody that can help you with your business. The stuff that this person is going to share can help you with insights on your business and all of that. It is a huge, huge name, has turned down multiple requests to be on a public-facing real estate stage that is open to all agents. And for the first time, we're going to have that opportunity. It is unbelievable that we're able to pull this off. So that's going to be the 23rd. Make sure you sign up for that. It's absolutely free. If you've done any of our free virtual events before, you know these are, quite the entertainment party as well. All right. Let's just recap here at the end of last week really quick. Core inflation PCE report, which is the Fed's favorite gauge of inflation. That's going to hit, that hit on Friday. Okay. And as it hit, inflation was hotter than expected. Inflation went up to 2.8%. Probably have the news by now. It was higher than expected. Spending increased 0.4%. So core PCE, that's the key Fed inflation, is now at a 12-month inflation rate at 2.8%. Remember, 2% is the target. So if 2% is the target, we're now at 0.8% higher on their favorite gauge of inflation. The way that the Fed, meaning likes to measure inflation, doesn't mean the CPI is not important. The Fed's trying to balance how traders and investors are thinking, and they like the CPI a little bit better. That's where they're placing their bets a little bit more. So what were economists looking for? They were looking for 0.3% on the spending. That showed 0.4%. And they were looking at 2.7 on the overall core inflation number. So, nothing crazy there, but definitely showing inflation coming in hotter. What did that lead to? That led to more uncertainty on top of the Liberation Day helping that we're going to have on Wednesday. How are tariffs going to impact? It seems like the tariff thing 2 days away, 48 hours away, it's moving forward. There was actually this clip, and I don't know if it's even worth finding, Haley, but there's this clip from, I think, 1987 where Trump was back then, 40 years ago, was talking about tariffs and the power of tariffs and how he thought, the U.S. economy could benefit from tariffs. Like, I don't think we're going to see these tariffs go away in 48 hours unless the administration really got a deal cut exactly how they wanted. It seems to be this is moving forward, and it seems that it's creating a lot of uncertainty. Some of that uncertainty, looks like this. Okay. Goldman Sachs just revised its 12-month recession probability odds from 20 to 35%. Still more likely than not. Still more likely would be no recession rather, so 20 to 35%, that indication is moving up. Moody's chief economist also revised 12-month recession probability from 15% to 40%. Mark Zandi said in his tweet, yeah, it's still 60% no recession. But everything that's going on, hey, inflation a little bit higher at the end of the week than expected. Also, Liberation Day looming, April the 2nd, the tariff day. This has a lot of these odds going up, not over 50%, not more likely than not happening. It's just that they're moving up. Goldman Sachs going from 25 to 35%, or 20 to 35 for the second time in less than a month. We're raising our tariff assumptions. This is Goldman Sachs. We now expect the average U.S. tariff rate to rise 15 bips in 2025. Our previous risk case at 5 was more than our previous baseline. So they expect the reciprocal tariffs to be announced and average 15% across all U.S. trading partners on April 2nd, which is Wednesday. This, according to Goldman Sachs, is likely to boost consumer prices. Notice one thing that a lot of people get wrong. This is the right way to say it, the way Goldman Sachs is saying this is going to boost consumer prices. They're not saying that it's going to boost inflation. Okay, it's going to boost, meaning inflation is different than a price. That's why, like, when people say, like, when is prices going to go down to 2019 levels? They're never going to. That price category is now there. It's about the rate at which those increase. So this just boosts prices like up front. It's a little bit two different things that we're talking about. They've also lifted their year-end inflation forecasts. Okay. They now see a 12-month recession probability of 35%. The upgrade of our previous 20% reflects our lower gross baseline. And so they also have real income growth already slowing and expected to average 1.4% this year. All right. So that's what's going on right now. Through the weekend, we're seeing inflation being a little higher than expected. We're seeing a lot of uncertainty what's going to happen this week. as some of these policies take shape, and you're seeing recession signals go up. All of that, if you're in housing, should be music to your ears. Okay, there's nobody saying there's a recession at 90%. It's a little bit higher increase. What is that higher increase doing? It's actually getting the 10-year into a place that you can start to see an impact on the 30-year fix. Look at that, 4.198. By the way, that's the lowest we've seen in 3 months. Where we're at right now, this Monday morning, the lowest the 10 years been in 3 months. Go to listen to Knowledge Brokers podcast we did with Logan Motoshami. We've got Logan's market tracker coming up here in just a second to review that. But go check out Knowledge Brokers pod from Friday when we chatted with Logan. Like this is good for the spring market, this uncertainty. Okay. Whether you like tariffs or not, the hysteria around them, you should be rooting it on as somebody in housing. Okay. Because the only way we get deals to open up in housing is the 30-year fix moving down. Okay. If there was, if we were going to get out the money printing machine from 2021 and 2022, and we were going to supplement this, economy. So, pacify, give people another hit of the drug, then guess what? Rates would probably be up near 8%. Inflation would be going higher. Rates would have to go up. But right now we're actually seeing, we saw it on Friday. I expect this number to go down. We saw the 30-year fix come down off of those, recent 3-4 week highs of 6.8 back down to 6 3/4. I expect this to come down even more, looking at where the day is starting on the 10-year. This is leaning into the spring market at the right time. This is creating a tailwind you don't get a 30-year fix near 6% without some level of labor break, without some uncertainty in the market. Doesn't mean it's a 35% chance of recession. Okay. It's 1 out of 3. By the way, there's always a chance of recession. Good times, bad times. There's always some level of recession. We're up from 20 to 35. This should be welcome news to home shoppers and buyers who are going to see the 30-year fix have a chance at moving down to those low end targets of 6%. There's targets up over 7%. We're trending in the right direction on the 30-year fix. If you're looking at this spring market, if you're looking at this summer home buying season. All right, let's take a look at where we're at on inventory for the week. Speaking of Logan, who did a great job on that pod, he does a great job breaking this down using Altos research each and every single week for us. So we had another healthy accumulation of single family inventory here for the last 7 days. We're sitting at 31% more than last year. That bumps us up in the last 7 days from 668,000 on active single family homes to 675,000. Our peak last year was 740,000. Like we're narrowing in on the peak. We might get up over 800,000 at some point this year. I certainly think that's a realistic possibility. This time last year, we were only at 517,000. If we just look at where we were the same week last year, 517,000. We did see an increase in that same week. Of course, the bottom was 2022 at 240,000. We've recovered so much from that point. If we look at the last, what I would call normal market, April, let's call it the last week of March in 2019, we're at 836,000. We're at 675,000 right now. So we're closing that gap. We might get up over 800,000 at some point this year. The peak in 2019 was 976,000. We're heading in the right direction on inventory. We're up 31% year over year. New listing data is also improving. We're at 67,000, basically 68,000 for the week. That's coming off of, when we compare it to last year, we're at about 60,000. So we've seen positive prints here for, multiple weeks in a row on new single family listings. More sellers are, more homeowners are coming off the sidelines, putting their house on the market. You get that rate down closer to 6%, you'll see even more of that. As more competition though grows on single family homes being on the market, you're going to see stuff like this, maybe particularly in Southwest Florida and Texas for sure, where you're getting more price reductions than you would anticipate in a spring market. You're actually at 35% right now versus 32 and 30 the 2 years prior. You typically get about a third, so you're 2 points higher than 33% right now, sitting at 35%. The sellers who are on the market want to move that property and are reducing their price accordingly to reflect the market. We're going to show you pending home sale report from NAR, but just take an Altos research report into consideration. We're still lagging behind last year. We're going to get into the month over month print here from NAR in just a second. But in comparison to last year, we're still 10,000 homes short of where we were last year. But we're seeing a very, compared to 2023, we're seeing a trend line similar to last year. We're seeing positive growth on total homes in contract right now. We'll see if we continue to see the rates move down. If the economic uncertainty, if the equity investors move over to treasuries, move over to the 10-year, move over to safety, so to speak, you're going to see that continue to move down. And as that moves down, you may see a longer run on pendings. Like June, July, there might be an extension of the peak selling season here as we move forward over the next couple months, if the rate continues to cooperate as it has recently. Okay. And one of the signals that we're seeing here is that mortgage applications, coming off of historic lows, I get it, last year, they're continuing to move positive right now. If we keep seeing that here over the next, call it, month or so, there could be a strong argument for a extended spring selling season. As long as these rates cooperate, and as they do, we continue to see mortgage applications, moving up. The spread is also helping us right now. If we had a spread like last year, rates would be up over 7%. So the improvement of the spread, and we're even seeing recent improvement here on the spread between the 10-year and the 30-year. Logan talked about this a little bit on that Knowledge Brokers pod on Friday. That's continuing to help out. If we were at a normal spread, we'd be closer to 6%. If we were at last year's spread, we'd be over 7%. So the improvement is certainly welcomed right now. It can go either direction, right? Take the uncertainty, whether you like tariffs or not. Nobody really knows what that long-term impact is going to be. Listen, there's been so much money pumped into the global economy. We're set up for a lot of long-term issues. Okay. The way we've printed money. Now, some people believe you can just keep printing forever and forever and forever. I don't know how that works. But one thing for sure is nobody really knows these solutions that the administration is trying to do, how it's going to impact the economy. In the short term, housing is getting a little bit of a benefit from that. The administration wants to tout housing as a win and ramp up some more of these transactions with lower interest rates. Speaking of transactions, NAR comes out with their pending home sale data once a month, and we've got February's print. February came in month over month at 2% higher. Okay. Where do we see those improvements? Which regions? We saw the South up 6.2% month over month. We also saw the Midwest up 0.7% month over month. Northeast was down once again at 0.9%. Northeast really struggling in inventory, and the West was also down 3%. Look at these numbers on the index. 72 is your national number. You're looking for 100. That's activity relative to 2001. So historical low levels of, pending home sales when you factor in population and wage, incomes, all of these. We're basically at the bottom in terms of deals. The 2% move up month over month is expected in February. January was cold. January is the beginning of the year. You get a seasonal bump as you move more into the spring. So The 2% expected. It's not a huge number. It was certainly welcomed to see an increase, but also expected. These index numbers in the Northeast and the West are really low, 62.8 in the Northeast, 55.9 in the West. The only region doing, remotely well on pendings is the South at 86 relative to 2001. But in the South, so that region, that Southeast, Florida in particular, is like, there's so much inventory. There's so much inventory. Texas, there's so much inventory. The world. Listen, there's a lot of sellers, a lot of inventory. There's still a lot of buyers. The Southeast region has the most buyers of any other region. You can see that in the pending home sales data. So you still got buyers. It's about getting the sellers in those regions to be realistic. Yeah, you missed the 2023 boat. You do have to price your property accordingly to where the pressures of the market are happening. Okay. So there you go. Here's some of the key highlights here, or some of the key forecasts, I guess, from NAR. They're calling for a 6.4% average. Realtor.com's got it closer to 6. Again, the uncertainty is a welcome sign to get closer to 6, but there's a lot of forecasts like NAR and others that are at about 6.5 for the year. Okay. And so I know we're not there yet, but I'd rather see 6 personally. You see some that are at 7. I don't want to go back in reverse either. Existing home sales to increase by 6%. That's total sales. And new home sales to increase by 10%. And home prices nationally for the median going up 3%. Those are some of the key indicators where their predictions are right now as we exit out of March and tomorrow move into April. All right, just a recap here. 10 years now up over 4.25. It's the lowest in 3 years. 3 months, not 3 years. And then we are coming into the week at 6.76. We'll see where that reading goes later on this week. If you didn't sign up when I announced it on the top of the show, make sure you go to nowbamfest.com and sign up for BAMFest 2, the second BAMFest we've done. It's our second virtual event of the year. This mystery guest, it's going to be the first time on a public facing real estate stage, has been asked multiple times to do this, has said no every single time. It's a huge gift to the industry that we were able to pull this off. That'll be April 23rd. First announcements here for all of our Hot Sheet members. All right, Hot Sheet BAMX members, make sure that you're using your classroom here on the Hot Sheet. If you want access to all the things that we do here on the Hot Sheet, all of our slides, it's all broken out for you here inside of, including today's pending and inventory data, all broken out for you in the Hot Sheet slide, as well as the top 10 housing markets with cash here for the week, as presented by Zoodealio. Every BAMX member gets a Zoodealio platform, so you can generate 4 offers in every single listing. They've got more data than anybody when it comes to cash offers. And over the last 7 days, they say Denver, Jacksonville, Las Vegas, Dallas, Phoenix, Atlanta are the top 5 cash housing markets. You have Houston, Knoxville, San Antonio, LA, and Miami. Those are your top 10 for cash offers here over the last 7 days. BAMX members, you have access to all of that data each and every single day in the Hot Sheet, as well as our new content each and every single week. New content drops for the last week have been added in on Fridays to your, here's something for tomorrow. A little, wouldn't that be great if it was legit? BAMX members, a little April's Fool drop for you in there. All of our templates for you to use, as well as all of the video and email scripts. These emails are crushing it right now. My team's open rate jumped up 100%. So we were at like 20%, now up over 30%, almost 100% there on a jump up in terms of how much our open rates have moved up. We were trending as low as 15% some weeks, now up to 30%. Go to school.com/BAMX to sign up for BAMX today. All BAMX members get a Zoodealio account included in your membership. So make sure you sign up for that. Make sure you sign up for Now Bam Fest. That's totally free. And I will see you guys back here tomorrow as we kick off Q2 together on the hot sheet, 9:30 on the East, 6:30 on the West. Until then, toodaloo.